works.
Hello everyone, and welcome to episode 21 of Let's Play Wall Street Raider. I'm RakeM, your host. Before we begin, let's review where we are with our commodities. We currently have wheat and corn we've shorted for the full amount. Wheat is down, but corn is being stubborn and is holding in the $10 range. And basically has just been going up and down for the last, I guess, 3 or 4 months. And it looks like if it keeps doing this, you know, back when this volatility was going on, I was flirting with the idea of buying it and selling it every month. And if this trend now resumes, I'll be doing that again. So we'll be keeping a close eye on the price of corn. I'm tempted to buy the stock index, but the problem with doing it right now is that the interest rate is high. It's above 9%, and so the prospect of this number, the index, going up with the interest rate this high is not that great. And on top of that, they're asking for about a 40% premium, which under normal circumstances would be fine, but with the interest rate this high, it's just bad for the short term. So with the current policy being neutral, we're going to hold off on dabbling in the stock index at least until this policy changes. If it goes to tightening, we'll look to short the index, and if it goes to easing, we'll look to buy the index. Alright, but as far as like gold and silver and oil has been hovering between 110 and 130. Gold peaked around 1600 and is now going down. Silver has been hovering between 21 and 19. Not really a lot of movement. I guess it got as low as 18, but not a lot of movement on it. So we've been kind of staying out of it. It's hard to keep a real close eye on these commodities when we have all these earnings reports coming up. So mostly just been waiting for wheat and corn to go down and staying out of the rest of it, since there's not a lot of volatility right now. So we'll be waiting for some kind of message from the Fed regarding the interest rate, and then we'll decide what to do with the index. So as far as the companies go, we are doing fairly well. All of our stocks, or the majority of them, have positive earnings. There's a few, like for instance Asian Pulp and Paper, we just got into bankruptcy. Same thing with Gillette. Goodrich he's in the defense industry. We merged him with somebody, and he's just had dismal management the whole time. Basically, he's going up now, but we're not sure that that's going to continue. Whatever we decide to do, everything that we've done so far, he's been very slow to react, and I'm not happy with him. But that's a big industry, so we can't just abandon him. We've got to turn him around. We may merge him with some other companies or something to try to hasten that process, but we'll check on it when we get there. Imperial Tobacco is a bankruptcy that we just inherited. New York Times, same thing. News Corporation has gone from positive returns to negative. I'm not exactly sure why. We've got to go look at him probably right away, because he's a subsidiary of AOL, and he's going to drag down AOL's earnings if we let this continue. Southern California Ed, the industry that he's in is not doing well, and we've got some major corporations there that are expanding beyond their means, and so we may actually exit this industry, or we may freeze everybody. I don't know. We'll look at it. Vertex is a new bankruptcy, and ZDNet we took out of internet providers and put him in integrated oil after we sold Arab. So he's got a lot of assets. He's got 19% of Arab oil and some cash, and we're just trying to turn him around and give him a positive return before we start messing with the growth on him. but the growth rate here is positive, and pretty much everybody is growing negative or worse. So we're going to want to turn this around as soon as we can get our management to very capable status. And we'll probably start, the returns are low because we bought new assets here. And so as a result, we've got a lot of stocks that are prime targets for takeover. So we'll be using some of that excess cash to buy some of these stocks and give ourselves like a 30-40% market share, grow -10 until the returns come up, and then start to grow. So that's the plan. Now, we're again going to try to get through a lot of game time today. Don't know how successful we're going to be. It depends on how fast and furious the bankruptcies come, and how big those companies are, and how many subsidiaries they have, etc. So what I'm going to do is I'm going to turn on the ticker, and for the first few earnings reports we'll just go through what I'm going to do. But basically, if all that's required is to look at the stock to pay down its debt and no other changes are needed, then there's no reason to stop fast forwarding and explain it. So I'm just going to pause the ticker or come and talk about the ones where I need to do any adjustments. Alright, so Glatfelter here has gone broke. So let's take a look at him. He's in the paper products industry. He's reasonably competent, and he's super small, got too much debt. Let's see if we have anybody else in that industry that has also gone broke, and it looks like we do. Well, UCC we've had before, we've had for a while. So let's see if he has cash to buy up those guys. He doesn't really have cash, but he's got credit. So let's buy up Glatfelter. And there's one more. Asian Pulp and Paper. And he's 2,800. Does UCC have enough credit? Yes. Okay. Okay, now let's liquidate those two. LSI will come back to you. Well, actually, let's just go to take care of you. Pay down debt. His earnings are still going up. Alright, let's look at Rambus. His earnings are going down. He's in packaged foods. Right here. Alright, and here's the problem. Now we froze him. I believe we froze him. Yeah, we froze him. But he's still got some cash before he's being buoyed up by this by these futures, I suppose. Corn, he bought it at 4 and it's up to 10. So that's helping him out. But there's a limit to how high this will go, so he'll have to come down here pretty quick. So until then, let's go ahead and lower our growth rate. Just make it 10%. And I'm going to leave it at that. Now let's go look at ST. His earnings are still headed up. So let's pay off our loan. See if we need to change anything else. Now we're growing negative, and we got a 20% return, which is excellent. We're very capable, so we can knock down our R&D to 6. And we may want to up the R&D on LSI here. see what his management's rated at. Reasonably competent. Well, let's just make it 6%. And we have a 50% market share, so we're going to have to knock down his growth rate too. We do not want to establish a monopoly here. All right, Goldman Sachs. Repay the loan, and let's go look at the industry. We're very capable. And the growth rate's positive here now, so let's up our growth to 12% and knock our R&D down to 6%. Now let's go look at some of those bankruptcies. All right, Gillette, household and personal products. All right, guess we gotta go look at AOL. Very capable, but he's spending 12% on his R&D, and the industry's deteriorating now, so we're going to probably have to lower our growth rate. Alright, let's go take a look. Yeah, I got a lot of people growing large now. Alright, so we'll lower the R&D to 6. And here's another reason why. And we'll lower the growth rate to 13. Okay, and ZDNet is down. And whenever we get a break in the earnings reports, we'll go look at these bankruptcies. I don't think we have any that we have to address immediately. Alright, he's going to go from negative 76 to just negative 14 cents. So that's good. So let's add one company to him. Let's add this one, if he's not too big. Oh, he's pretty big. He's a little too big. Who owns ZDNet? Is it Zurich? Does Zurich have 300 billion? No. Does anybody have 300 billion? SunTrust has almost that much, but we don't want to have him without cash. So really it's just me. I'm the only one. It's May 30th. Now you notice the price on STI is way down. And most of that's due to the interest rate and the loss of all the income from the interest rate swaps. But this is going to be cyclical. I predict that within the next year he'll be back up into the 250 range. And when he gets there, we're probably going to want to sell a small percentage of him, like 5-6%, so that I can start collecting options on him. He's almost down to cost. Okay, getting back to ZDNet here. let's have ZDNet buy 20% of Royal Dutch. And I'll buy the rest. Now I'll contribute Royal Dutch to Zurich, and he'll send it on downstream to ZDNet, and we'll liquidate Royal Dutch. Now we're going to have a big debt, but whenever we pick up some income, this is where it'll go. So all the dividends that Zurich is collecting, minus any taxes that he has to pay, we'll have him contribute those to ZDNet and have him pay off his loan. Because this loan, while we're in line with the 3-to-1 principle, it's very expensive. Very, very expensive, especially with this kind of a return. So let's grow -10 and see if we can't get these returns up. Okay, we're reasonably competent, spending 8%, that's fine. And our value is 38 cents, so we can give a dividend if we're bringing in money, but we're not, so we'll wait until we have a positive return. Okay, I don't remember who that was that just declared their earnings. I think it was Up. Oh, JCPenney, that's who it was. Alright, so let's pay this toward their debt. Alright. So, getting back to Asian Pulp and Paper here. Let's liquidate him. Glatfelter. Alright, now we got too much debt, so we want this to be 8,500 roughly. Is that right? No, 6,500. So we need to give him 5,300. Okay, 3-to-1. His earnings are going up. Reasonably competent. We're spending 6% on his R&D, and our value has gone up, so we need to increase our dividend to 40 cents. Let's take a look at the industry. Alright, we'll come back to you in a second, A&P. Alright, so Industry's growing at -2, but he's got a decent enough return for 5% growth. And we could buy a larger market share for fairly cheap. Alright, let's go to Hartford and have him buy Nippon paper. Contribute him to Union Camp. I guess I should have. Oh, blocked by the bondholders. Okay, well, let's buy back the bonds then. A&P and Costco. Let's write that down. A&P and Costco. Because I'll bet you another one comes up before we're done with UCC here. Alright, no more bonds. So we'll liquidate Nippon. Yep, see, Siemens. Okay. Let's see. Okay, debt. Alright, so we want it to be this divided by 4, so 9 billion, so we need to give him 3. And our dividend needs to go up to 50 cents. Of course, it's going to need to go up more than that once we contribute cash to him. So let's do that first. All right, another one of the list for us to look at. Okay, 56 cents now. Okay, so we had a 17% return, now it's 18. And all we did was add Nippon paper to our asset base. Not champion, but this one, UPK or UPM Kaimine. I don't know. Not sure if I'm pronouncing that right, but we could add him too. But we're going to wait at least another quarter before we do it. And so we're done here. All right. So the first one we need to look at is A&P. His earnings are going up. They're down last quarter, but going up from last quarter. Alright, got no debt, plenty of cash. Growing at 1%. Our return rate's still fine. Are we reasonably competent? Yeah, so we'll leave it at 8. Alright, nothing else to do here. Alright, Costco is next. His earnings are going up. Alright, let's add Sigma to our list. You in a minute, Sigma. Glad to see that you're positive now. Alright, so we'll pay down the loan. Alright, we're growing at 10%, but the growth rate's down, but we have a decent return. A really nice stock price. It's almost high enough to sell it. Just need another 20 points or so. 30 points. Okay, he's very capable. So we can back our R&D down to 6. And I think we'll just do that. I don't think we need to do anything else. Next one to look at is Siemens. His earnings are flat, made 39 cents and going to make 39 cents again. Management's mediocre. That's not good. So let's raise our R&D and our growth rate. Well, yeah, and our growth rate. Okay, so we'll make this 8, make this 8, and double check our dividend to make sure it's the right size. 941. Alright, so our dividend's a little bit high, but we're bringing in plenty, so that's fine. Let's change our growth and R&D to 8%. And that's good enough. Okay, next one that came up was Cordeline. And I think we have a lot of stocks in mining now that we need to take care of. So let's take a look. Well, just one in precious metals. Buy a larger stake. Let's see how much money we're talking about here. So he's 37% for 18 billion. It's not that much money. I think we'll just stay out of it since it's that small. Let's look at the base metals. Still got Southern Copper, which is still below its price. Still negative everywhere. Gosh, we need that interest rate to go down. Oh, look, corn's down. Let's see. Yeah. It's still going down? Wow. Alright, I'm going to sell it and then buy it. Or, cover my short position and buy it. And see what happens. We may do a bunch of up downs with this. And it looks like silver is ready to short sell. So let me do that real quick. And I'll be right back. after looking at the markup that they were going to charge me for the corn, I'll just show you again. The markup was pretty high, so I decided not to get any right now. But let's go and take care of all these bankruptcies that we got. Gillette's next. Okay, let's see. I think we have something else besides him in here, don't we? Yeah, Warner Lambert. Alright, let's put Concentric Medical on our list. Okay, so Warner Lambert has a good credit situation, has some cash. Let's see what Gillette's worth. $747. So let's just buy him and merge him. Okay. Put the remaining cash towards the loan. Alright, let's add Burger King World to our list. Come back to you, Burger King. And now Luby's has gone bankrupt. Alright, so Warner Lambert scheduled to make 95 cents, but that's down from what he made last time. He's reasonably competent, spending 6% on R&D. Here we are. Yeah, the rates are going down. See, he's growing pretty fast. Let's see what we can freeze his credit, but he's got cash, so I mean it's not going to have an immediate effect. Alright, so let's freeze Colgate Palmolive and Procter & Gamble. Because while it may not help a lot, it'll help some. Alright, let's see what else we can do here. We can back off of our growth rate. And it looks like we're going to get some more companies in bankruptcy. Fort James, Tupperware, Rubbermaid, Kimberly-Clark, and I don't know if this is Weyerhaeuser or Wyeth Labs or who that is, Wyeth Corporation. Alright, so I guess we'll just leave it until some of these others go broke. Not much I can do about these two right now, so I'm not going to try to fight them just yet. Let's just change our growth rate down to 1. Alright, so next up was Sigma. And his earnings are flattening out. Of course, he's just a holding company with stocks. Which was a plan we abandoned when we realized that we could get a better return than these dividends off of bonds. So I'm not going to worry about him. We'll probably look at putting him into an industry at some point. Alright, so next up is Concentric. His earnings are flat now. He's very capable, so we can back down on his R&D. And let's look and see if we can add anybody to him. Well, if we just want to grow organically, we can add this guy. He's got a good return. Foundation Health. Oh. MGM Grand. Add him to the list. Foundation Health. Got a little bit of a premium, but not too much. Nobody owns him. We've got 2/3 of what we need to buy him, so let's do that. Okay. Let's reduce our R&D to 6%. Let's make sure we're still very capable though. Yep. Alright, got a nice return. And we're at 414% of our stock price, of our net worth price. We probably want to think about selling him. Okay, so not quite 3 times what we spent on him. Earnings aren't recalculated yet, so I think his earnings will go up once it's recalculated. So let's drop our growth rate a little bit down to 16. I guess you would characterize that as a lot, but I want to have some money left over to pay down our loan. So let's change the growth rate to 16. Right, our debt's a little high, but we're very capable and we're about to go up, so that's fine. Alright, so next up was Burger King. Oops. Alright, let's pay down, let's pay down our loan. Alright, we've got a 13% share, and we've got Luby's down here too. Wow, a lot of these are going to go broke. But we've got a good return. How much is Luby's worth? 300? Alright, let's buy it, merge it. That situation's fine. So that is it for him. He's still very capable. Yep. And earnings are going up now. So that's it for him. Okay, next up is MGM Grand. And his earnings are going up too. Okay. Everyone's growing negative but us. and we have the best return. So absolutely nothing needs to be done there. Okay, let's go back to the bank, see what we haven't hit yet. All right, Browning Ferris, wow, look at that, up again. Now we need his price to go 470. That's it, that's our target. All right, let's see if we can re-enter the industry, and as soon as I say that, the price goes down. Doesn't look like there's really any candidates. Maybe waste management here, but that's it. All right, let's lower our R&D to 6. Well, actually, let's make it 8. Alright, growing at 12%, that's fine. Can probably up our R&D, making $8.40 a share. Our net worth is $124, so let's increase this. Look at that, it jumped our price immediately. Alright. Here he is. Sell him off. And let's buy, I guess we'll buy waste management. He's really the only option, so. I'll put VW on the list. Let's see what he needs. Alright, so we need to get down the debt to what, 12.5? So he needs 10 billion. 10 billion 5 minus this, so 8,500. Alright, his bonds are 9.25 and his loan is higher, so loan it is. Alright, let's add Daewoo to our list of places to look. Of course he's up, so he probably won't have to do much. Alright, so debt's good. Now it's just a matter of management. Dividend is 67%, need to lower that to 12. We don't need to grow negative. Let's make it a positive 8%. And on R&D, we need 12% to get him out of the basement here. All right, so dividend 12. Productivity 12. Growth 8. All right. And we need to eliminate any swaps. Let's add Southern California Ed to our list of things to look at. Alright, so we need to check and make sure in all the things that we've been doing. Hagemeyer is ours now? Okay, let's make sure we don't have a monopoly. 41, 43, okay. It's got a decent return. Reasonably competent. Not that big. He owns bank stock. Ooh, a bunch of bank stock. Why is he rated to buy? He's losing money. Just because his stock price is good? Or favorable, I should say. Alright, let's sell him off. Pay down our loan. Berkshire Hathaway, in order to improve its weak balance sheet and credit rating, is proposing a recapitalization by issuing $2 million of new 9.38% bonds for each $3 million in principal amount of its existing 6.25% bond of 2035. The bonds are currently trading at $53.88. The new bonds would be due in 5 years, or 2029. Do you choose to accept the new bonds for bonds of BKH owned by you or other controlled companies? You know, I've never really done the research on whether or not it's smart to do this. And I don't really understand what the benefit is overall to us or to him of saying yes or no here. I assume it's because he's desperate to not declare bankruptcy, but so I suppose it would help him. And if it would help him, it would probably not be as good to us. The question is, do we want him to declare bankruptcy or not? And we have enough going on, so I'm just inclined to say yes. Alright, A&P has the money, so let's buy out Hagemeyer from the bank and liquidate him. Alright, let's grow negative here and slim down some more. We may pick up him may get Trader Joe's in a bankruptcy, and Whole Foods is also on the way to bankruptcy too. So let's slim down and help everybody out. Get a smaller percentage of the industry here, so that if they do go bankrupt, we won't have a monopoly. All right, that's A&P out of the way. Now let's look at Volkswagen. Volkswagen's going up, so let's pay off the loan. All right. Wow. Great return in an industry that's downsizing. Looks like we may pick up Chrysler here in a bankruptcy. Well, maybe not. I don't know. We'll see. What's he earning? He's making money, so it's possible that he can recover if the interest rate goes down, that is. Alright, well, with the return we've got, we can afford to grow. We have excess cash, but not a lot. So I think I'll just leave it the way it is for right now. Our stock price is almost up to 400%. So I don't really want to merge him with anybody because he's almost ready to sell. So let's see if we need to increase our dividend, and we do, to 61 cents. And that may give us the stock price boost that we need. Okay, looking at our spreadsheet, 207 is what our target price is, so he's already there. So VW is down here almost 6 times. So let's go ahead and sell him. Okay. And see if we can re-enter the industry. So we can get Rolls-Royce and BMW. We're going to get in a bankruptcy. We could actually buy Fiat as well. Alright, so let's start with Fiat. Alright, let's see what he needs. Alright, that's 2-to-1. So we need to get him down to 9 billion. So we need to give him 5. We need to give him 5 billion. Of course, he's got 2,300, so we need to give him 2,700. Okay. And his earnings are already up. He's mediocre. So let's increase our R&D to 9. Alright, we don't need to grow negative. We can make it 0 for now. And let's change the the dividend to 9 cents. buy back some of the bonds. Wow, that's a high price for bonds. Okay, let's see. We're gonna do right at 4 billion. None on the open market, so we'll buy it back at 105 if we can, but we can't. Alright, I guess we're going to be paying 107 then. So let's make it, we'll just make it 37.33. And that'll have to do. Okay. So who was up next after that? Daewoo Motors. He's growing. That's good. Mediocre. That's fine. Let's pay it down. Mediocre, and we're spending 7%, growing at -10. We're making a positive return, so we should probably do a dividend for 60. Right, I think that's going to be it for now. Got to reform his management. I guess we can up the R&D 1%. Make it 8. But I don't want to do any more than that. Okay. Alright, and then Southern California Edison was the only other one that we haven't looked at yet that came out. Let's pay down the loan. It's just terrible. Just terrible that this company isn't doing anything with a reasonably competent management rating. Alright, he's making money, but he's got a dividend already. We're growing negative. Alright, we don't need to grow negative, and we don't need to have an R&D that high. We can back it down to 8. So 8, 2%, 8%, 2%, and we'll leave the dividend the way it is. Alright, let's see how that does. Okay. End of June, let's get our interest rate swaps money in here. And please, oh please, give us a lower interest rate. Alright, SunTrust did good. And it's supposed to go up again. $500 million in cash. Hartford did well. I think it's time that we sold corn short again. Yep. Alright, I'm going to sell it short and come right back. Zurich Life is up from last year, but way down from last quarter. But there's not much we can do about that, really. It's going to go up again next quarter, though. Alright, let's look at Vertex. Vertex is in bad shape. Alright, let's look at this. The question is, do we want to keep it? That's the question. Because, I mean, all of these that are CC, CCC, and all this, all of these, we're gonna get all of those. And of course, when they go bankrupt, they're going to lose a portion of their assets, which is going to drive Millennium up into a monopoly. So, what we probably ought to do is have Vertex become the parent, and when the others go broke, we'll put them all under Vertex, and individually they'll all sue Millennium when he gets to be a monopoly. So, the question is, where do we want to put him? Who has the most money? Probably Hartford, right? Nope. Irish has more money because of the swaps. And he has fewer stocks, so that's fine. Let's have Irish buy him. And Vertex needs, first of all, to cancel his swaps. And he needs $2 billion. So let's give him 4. Buy back his loans, or his bonds, I mean. Oh, helps if you have the right one selected. Alright, so buy back his bonds. Pay off his loan. Alright, and he's very capable. So as he's go broke, I mean, he's going to get a larger market share anyway. We're only 3%, so we don't really have to grow negative. We can just grow at 0. Alright, that's good enough. So who else do we need to look at? We haven't looked at Goodrich yet. We haven't looked at Imperial Tobacco yet. Alright, let's take care of the tobacco first. We'll come back to Nissan, because he's up. Alright. Imperial Tobacco. So we can get up to 20% here. And his return's better than ours. Mostly because he's not spending anything on R&D. He's got $1 billion worth of cash, but he's not paying down his loan. That's not very smart. All right. that's not quite good enough. Let's pay it down and then see where we are. Alright, so we need 7,500, and that's pretty much where we are, so that's good. Good enough. And our earnings are going up again. We're mediocre, but we're already attacking that problem. So let's make sure our dividend isn't too high. Nope, it's just right. Okay, done there. Let's go look at Nissan. Alright. Earnings are still going up. He's very capable, so we can reduce our R&D down to 6. And we're making a profit now, so let's make sure we have a dividend. 18 cents, we can bump it up to 21. Okay. Growing at 10% with a 40% return. That's awesome. Alright, keep going. Keep it up. Alright. Clayton Homes go broke again. Yep. And we still don't want it. Alright, New York Times. News Corporation is in bad shape. Somewhat mediocre. Ooh, and Time Warner is getting close to being ready to be sued. Alright, let's have News Corporation buy the New York Times. And liquidate him. Let's increase our R&D to 12. Negative 10 is fine. Look at that. Isn't that just gross? What he's doing here? $51.5, and he's growing like gangbusters. And nobody's sued him yet. And that's why everybody's losing money. I mean, he's already frozen. There's nothing I can do to him. I guess we sold him at the wrong time. We didn't have him create a bank loan or anything, and this is why I normally do that extraordinary dividend. Alright, let's take a look at Devon. He's got plenty of cash. Earnings are going up. Very capable. Growing at 25% and still have cash. That's perfect. Keep it up, Devon. Alright, who else? Goodrich we need to look at. Goodrich and Microsoft we need to look at too. Okay, everybody else is positive now. Okay, Goodrich, let's see. You're going to lose money again, still grossly incompetent, spending 21% on R&D, and it's not having any effect. We already put you through a restructuring. I mean, what else can we do? We could find another stock to merge him with, but like UTX, United Technologies here, he's negative. So we don't want to merge him with him because that won't really help us any. Salt's negative 2. Just normally when you have a company that's losing money like this, you would up the R&D. If that didn't help, you would change the managers. If that didn't help, you would restructure. And if that didn't help, the last resort is to buy a company that is got a really good return, but hopefully doesn't have a really good stock price yet. You know, like something in the 140 to 150 range. And then you just merge this into that one. You know, merge your bad one into your good one. But the only one really that fits the bill is Pratt & Whitney. And he's owned by United Technologies. I mean, and he's losing money. So we're just going to stick with this for now. There's just nothing else really we can do about it. Just got to turn them around. I mean, we only just restructured a little while ago. It really hasn't been that long. Alcoa is going down and flattening out. But this industry is growing negative, so the returns have not been that great. Plus, we've got a 48% share. So we'll just have to leave him. Pay his debt down if he has any, but he doesn't. Southern Copper's way up. Their earnings are way up, but their stock price hasn't been. It's finally going up now. So we can sell it. We can finally sell it. Alright, now let's think about growing. We only have 39% of the market now. Everybody's growing negative. So we can grow positive. Let's grow at 3%. Okay, and now our earnings are going up. Which seems kind of weird since cash doesn't make as much money as this. But who am I to ask why? Where's Alka? There he is. So he's at 3x now. We just need to get him to 250. Alright, well, we've been going for over an hour now, and we only got through 2 months of the calendar, but you know, we did achieve a good return on several of our stocks, sold them off, re-entered the industry. All of our earnings are up, except with a few exceptions. So the real thing that would help us out would be if this interest rate would come down. But, you know, it's just not in our control, so we just have to hope for the best. So come back next time. We're just going to keep this up. We're going to go through all of our earnings reports as they come up. Hopefully we'll do a little bit more fast forwarding next time and kind of stay on top of things. But, you know, we're doing all right. The main thing is the interest rate. If the interest rate goes down, we'll get back up into the 60 to 70 trillion range. And as the income comes in from the interest rate swaps, that'll also buoy the stock price. So, if you enjoyed the episode, please like and share. And thanks for watching. And until next time, have a good one.